What is going on, guys? Welcome back to the MG YouTube channel. I'm Malachi Grubb, CEO of Lead Automation Elite Properties and an investor in Tesla. Wanted to make an interestingly different video for you guys because, I never make a video like this, and well, figured why not. Okay, so I'm actually at one of our newer properties, obviously doing some painting. I hate doing painting. But it's like one of the biggest things that we have to do with a lot of our properties because some properties we buy are properties that we just purchase them, paint them, and send them. You know, we have some of them that we purchase them, don't paint them, and send them. But like almost every property gets paint because paint is just like one of those things that you can like do pretty low cost. And it just like changes the entire vibe of a property. A lot of properties you buy, they look super dated, and you get good deals on them because they look dated. And a lot of times they look dated primarily because of things like paint. But yeah, I wasn't really planning on making a video on that necessarily today. I was actually going to talk to you guys about the stock market. I just recently made some posts on X about some of my trades that I've been doing. So I long-term hold stocks, if you're not already aware, and I also trade stocks as well. So, and this is part of the reason why I wanted to make this video, because this is going to give you a little bit of insight of like what my life looks like, you know, and really showcase like how success can look and the reality of success. And or not just success, but just grinding, making money, and becoming successful, right? Not necessarily just like what success looks like, because this is not what success looks like. This is what it looks like getting to success. But yeah, so I'm definitely a long-term holder, and everything that I do has a long-term, let's say, facet to it, right? AKA, like pretty much all of my trades are based on long-term philosophies. Again, even my trades are set up like that. So I'm going to give you a few examples just to kind of break it down. Now, don't get me wrong. I do have trades against some of my long-term philosophies, but those are what we would consider a hedge against my position. I'll be right back. I'm going down and coming back up. Yeah, and so basically the puts or those hedges are basically betting against the opposite of my philosophy. For example, I hold a lot of Tesla options. I also hold AMD options, call options. On the flip side, I will also own Tesla put options. I will also own AMD put options. And I'm just naming two stocks in general. There's quite a few other ones that I trade in and out of as well. But they are two of the primary ones that I trade in and out of. Because honestly, like keeping an eye on just a few stocks and understanding how they trade and like kind of just having an idea, like I can tell you roughly what Tesla stock price is right now, and it should be around like 417 a share. I can tell you like right now my option contracts are roughly like $4,200 dollars per contract. Well, that's the purchase price of the contract. And I just know that off the top of my head because those I trade those frequently enough to know like what the cost is. I also know that currently they are way down, right? And so when I say they're way down, am I way down? Not necessarily. But my long-term hold position is way down. And why am I not necessarily way down on my stock positions? It's because I had puts. So even though I haven't necessarily bounced back to truly realize, aka just see that full amount in my stock market account right now, I have basically realized gains on some of my puts, right? So I have realized gains on some of my puts. I then turn around and buy into more Tesla calls, more AMD calls. Again, just use as an example right now. And hopefully you guys can hear me. I'm sorry if you can't. But I basically haven't, I haven't noticed my account being up, let's say, as a total amount. Why? Because I am, not theoretically, in actuality, I'm down on my Tesla call positions quite a bit. Matter of fact, I think my average cost basis right now is like 5,200 or something like that. And we're down to like 4,100 right now. But the crazy thing about it is those same calls, like literally like a month ago, were at like 6,800, I believe was like the all-time high. 6,800. So it's down almost 33% right now. So essentially, all of my Tesla calls have the ability to go up by 33% just by reaching existing highs. That's not even breaking through new all-time highs. Okay, if Tesla starts to break past new all-time highs, those same contracts are going to be worth, $7,000, $8,000, $9,000, $10,000 each, and they're currently sitting at, again, like $4,100. And these are 710 calls that expire in January of 2027. Again, hopefully you guys can hear me and whatnot. I know this is a very peculiar way to go about shooting a video, but this also is one of my other philosophies about success, is everything should be multi-purposed. Meaning, here I am painting my property. It's just me now. Everybody's left for the day. And I'm shooting a YouTube video, So I try to carry that philosophy in everything that I do in life. Is I try not to do anything if there's just one particular reason for doing it. It should be like multi-reasoned on why I'm going to go about doing it. And that same thing will happen with stocks, and it will happen. Sorry, dudes, I'm like way down here, man. I can't adjust the camera though. I don't have time for all that. But so same with stocks. For example, when I talked about like I put my hedges on Tesla, right? When you say, okay, well that's against your long-term philosophy, it is. However, I have two reasons why I have that hedge. Again, this goes into my utility thing of like I want more than one reason. Okay, reason number one is Tesla could crash, and being that I have such a heavy call position on Tesla, that means my portfolio goes down by quite a bit whenever Tesla crashes. Okay, and there's times the way I flow money in and out and around of the stock market, I'll sell stock and I'll buy a property. I'll then cash out refi on a property and buy stock. So with that being said, I might have a property that I need to cash out some money on from my stocks, and aka I gotta pull money out of the stock market, right? When is the worst time to pull money out of the stock market? When is the time you should never pull money out of the stock market? When your money's down. You should never pull your money out when your money's down. So guess what? When my calls are down, I pull from my puts. I cash out my puts at a profit because I bought those puts whenever I was going up, right? When my Tesla stock position was going up. I buy those puts at those high elevated levels. Tesla then crashes, and I have either profit there that I can take as cash out of them and just hold them as buying power in my stock market account, or I hold them longer for potentially a bigger downturn. Give you an example. Now that takes me into the next reason. This is reason number two, an overall stock market crash. And this is actually what's occurring right now. we have basically had some stock market corrections that recently that are revolved around this AI bubble, and that basically companies are going too much in debt, too leveraged, spending too much money on AI chips and all that good stuff. Okay. This is the reason why I wanted to make this video, actually. The biggest reason why I wanted to make this video. Stocks will always change price. And that's why I buy calls, and that's why I buy puts. Stocks will always change price. I can guarantee you something about almost every stock in the world. The stock will go down from today's price, and it will go up from today's price. Now, if you agree to that statement, then it makes sense that you would own calls and puts. Because if it's going to go down, you can make money off the puts. If it's going to go up, you can make money off the calls, right? And so, let's say, for instance, if Tesla's having a rally today, and my position's way up, what I'll start to do is I'm going to use the current price as an example. Actually, yeah, let's use the current price as an example, and let's use my average cost basis, which, by the way, to me, my average cost basis doesn't matter. And if I remember, I'll explain to you why my average cost basis doesn't matter to me. The quick of it is, I've already taken profit on other things, and so since I trade, that cost basis doesn't really matter. I'd have to go a lot deeper, but that's the quick of why that my cost basis doesn't matter. Guys, let me get farther away from you. Oh, you know what I can do? I should be able to zoom in, man. Boop. Hopefully you can still hear me and whatnot. Cost basis. Okay, going back to it. So your calls and your puts. So example, let's say, for instance, Tesla starts to rally, and let's say in a particular day, my contracts go from being $4,100 each to being $5,100 each. When we start hitting $5,100 in a singular day, and it's more about the percentage move in a singular day, okay? I will start to cash out. I'll sell one contract at 51, I'll sell one contract at 52, I'll sell one contract at 53, I'll sell one contract at 54. And at some point in time, whenever I've sold like a percent or two of my portfolio, then I might not sell anymore for the day. I'll be like, okay, I took a couple contracts off the table. Okay, that's the way I look at it. I took a couple contracts off the table. Now, at that point in time, I might hold that as cash, or I might turn around and buy a put along with it. Now, one thing that'll matter is, like, am I currently holding any puts? For example, I just cashed out of my puts today. So I actually have no Tesla puts. So now I'm eager to buy puts again. So if it started rallying back up, I would probably sell and then immediately buy at least one put, right? And it may not be much. It might be a couple $1,000. But I'll buy that one put. And if it pulls back, then I'll be able to make a couple $100 off of that put. So it basically gives me the ability to take a little bit of money off the table. Now, where do I want to take this? Okay, so one of the key things I wanted to call out there is the fact that you see how, like, okay, that I've traded or I've sold out of some positions at 51, 52, 53, 54, 55, 56, $100, and I traded it, and I basically stagger that out, so I'm taking a little bit more profit every 100, whatever. I'm basically making $100 more on that position. However, I'm locking in some profits. I'm locking in some profits as essentially gains, right? And then I'll do a couple different things. I'll look at what's going on with Tesla, Obviously, if Tesla's the one that's up, then I know Tesla's up, so I might buy some puts against it. I might look at like something like AMD, and I might buy some contracts against that to like diversify in that way. Maybe AMD didn't go up very much today, and so a perfect example of that is my Tesla positions are down. I didn't have a ton of AMD calls. Sorry, my Tesla positions are down. So technically, I don't want to sell out of my Tesla positions. However, my Tesla positions were down by 5% today. However, AMD calls were down by 30% today. 30%. So I look at that as being a big buying opportunity. So I'm not selling Tesla at a loss. I'm selling Tesla for an opportunity that I see has more leverage to the upside. Now, when I said it's down 30% today, that means literally if it recovers, if AMD recovers even to the existing existing stock price that it was, I'll make 30%. If it goes above that, I mean, I could make 40%, 50% on that money. And on a call, I'm happy to make that much money on a put. Those are the type of results that I'm kind of anticipating from a put. So whenever I see that type of opportunity in a call, I definitely want to jump on it. Because again, I'm bullish on these companies long term. The puts are only a hedge against what could happen in the short term. Some bad news about, AMD lost some deal, or, let's say we got all these different tariff things going on, or we just got over the government shutdown thing, now we got this AI chip bubble thing that they're talking about, right? So all these things are examples of things that drive down the market, right? Drive down stock prices. And not only do they create buying opportunities, but stocks almost always bounce back from these things. These things are news, and people freak out and immediately sell all their stock, and then a week later forget it and act like it never happened. Like literally talking about like our entire government's going to crash, the entire AI bubble, entire AI sector is going to crash, and then next week literally everybody will be talking about it and it'll be like it never existed. This is one of the key things that I see in the world and in the stock market, and it's one of the biggest reasons why like an individual can just make so much money in the stock market. It's like they literally just make up BS news, so that way it's like they make up news so that they can drive prices down, so that they can either buy in or get you to sell out, so that then they can then buy in. It's basically, in my opinion, mostly is like stock market manipulation. Is really what it boils down to. It's stock market manipulation, and I think it's being done like at a global level. It's done even through our governments. Like I think some of the news that like Trump and stuff drops, it's literally just to drive stock prices down and up, and basically manipulate the markets to, basically just do whatever agenda they want to do. Because like, I mean, it's just wild if you really understand like how things like the government work, and like the government would like do something like intentionally crash the stock market in order to prevent us having a recession, like an actual recession. So they would rather see the stock market crash, a bunch of people lose a bunch of money through the stock market, but through that crash, things basically rebalance out, and money kind of redistributes, and now we don't have a crash anymore. And so why am I telling you this, and why is this like really important at all to like what I'm talking about? It's because this is where you find the opportunity to, buy these calls and these puts at the right timing. Okay? For example, if a stock goes down in price and there's no apparent news on why that stock should be down in price, then I look at that as like a buying opportunity. I'm gonna try to adjust this. I'm gonna be over yonder over there. And maybe I'll zoom in some more. Hopefully you guys can hear me and all that good stuff. Got 2x that. Boom. Oh, it's almost too much, man. Could almost just left it at 1x. Just bear with me, guys. Bear with me. You're getting the true behind the scenes. Ooh, that's gonna be a good one right there, man. Y'all getting the true behind the scenes. Again, I mentioned before, like, why I'm not using editors and stuff anymore. I used, well, we still have an editing team, but I used to use the editing team to, like, edit videos like this. And also, I didn't do these types of videos on a ladder. I did these things in front of my desk and wearing a suit and all these good things. But I didn't enjoy making those type of videos that much. And it's also hard for me to make these types of videos. It's just hard for me to, like, turn on the camera and just, I don't know, yip with people. I don't know. That's not the hard part. The hard part is, like, turning on the camera and trying to do 2 jobs at once. That's the harder job. And also, too, like, there's just, like, I don't want to say insecurities there, but there's, like, I guess, like, insecurity around, does, like, anybody want to watch this, or I don't know. It's not even really an insecurity, because I don't really care what people think either. But, yeah, I mean, I just want to be able to provide something with value and whatnot. This is probably super echoey. Sorry, dudes. Did I just get paint on this? Please tell me I didn't. That's old. Okay. Okay, back to it. So for today, for example, for today, I traded some of my Tesla calls at a loss, and I bought in on AMD. And to give you an example of again why I did that, Tesla options were down 5%. I never sell at a loss. Tesla options were down 5%. AMD options were down 30%. That's a 25% difference in down. Okay, and the amount one's down. Okay, and then to showcase some of the results of that, those same positions that I bought in at are already at a 17% gain. How did I buy at the bottom, and how did I get a 17% gain in just one day? I bought at a price. I think it was $19. So when I say $19, that means it's $1,900 per contract. I bought the contract $1,900. Guess what? It kept going down. I bought it at $1,850, $1,825. And I think I bought it all the way down to like $17.9 was my cheapest one that I got. And I don't know exactly what it's up right now up to right this second. It's like something like 21 or 22. I can't check my phone because I'm obviously recording this video. And also I don't have like the best memory, so. But I do remember the 17%, okay? Now, again, to showcase a couple of important things there. One, I bought a contract, I bought another contract, I bought another contract. I kept watching throughout the day, just periodically I pull out my phone. Well, painting like this, pull out my phone, okay, where's it at now? What's Tesla doing, what's AMD doing? Okay, and then throughout the day I actually sold more Tesla positions to buy more of these AMD positions. Okay? And why did I not just do it all in one go? It's because this is like one of the things that it's in the Bible, and it's basically something along the lines of you're given a glass of water to drink, right? And if you always leave a little bit in that glass will always refill itself. And if you treat stocks in that same way, where you basically never let that glass run empty, and you always leave just a little bit left in that cup, it will find a way to refill itself. Okay? Do I miss out on gains? Yeah, I miss out on a lot of gains, man. I mean, I have some of these small trades that I've done with some couple thousands of dollars, and you know, maybe I was buying a position. No, stay where you're at, dude. Maybe I was buying in on a position, and you know, the price wasn't necessarily going down anymore, and I wanted to buy more, but I was playing the same waiting game to see, will it go down more? Will it go down more? And then it didn't. And then so I didn't get to build out a big position. I only got to build out like a contract or two. And then I turn around and make like 50% off that contract. Sometimes in a single day, sometimes in a month. And that's another thing too, is I'm not day trading. That's one thing that I also need to showcase, is that I'm not day trading. And I also wouldn't consider myself swing trading. Why? Why do I say that I'm not a day trader and not a swing trader? It's because I don't want to be locked into the style of one or the other, right? For example, honestly, the only reason why I'm probably not sold out of those A and B, well, two reasons why I'm not sold out of those A and B positions right now. One reason, I lost track of time and the market closed before I could sell them. You know, that's one of the reasons. The other second reason is because it's a call and I'm bullish on AMD, aka I think AMD is going to go up over time. I'm happy to hold AMD as a long-term position, so I don't mind riding it out until it gets up to 30%, back to 30%, or back to where it was at today, and me make that 30%, right? Or even go above that and make 40%, 50%. But however, on the flip side, like when the market opens tomorrow, if that's still up at that 17%, I'm probably going to sell out. And you might say, well, why are you going to do that if you're bullish on AMD? Well, here's my other reason. You know, we still haven't fully cleared this issue with these AMD chips, and that news is still floating around, right? And how I was mentioning before, this news a lot of times only lasts a week, and then everybody forgets about it, stocks rolling back up, and it was like it never freaking happened. Wow, it's crazy. On the flip side, there are occasional times where this time is different. This time is different, and it's going to crash. Things are going to fall to the floor. We've seen this happen back in May of this year, May of 2025. You know, Tesla positions, the same contracts I was telling you about, I was buying these same contracts for $1,000, $1,500. Like, the amount of dumb money that I made off of those contracts over the course of this year, and I'm ultra bullish on Tesla. Tesla has never been in such a good position that they're in right now with robotaxi and AI and they're talking about, you know, they're going to start producing chips for, they're going to just produce more chips than anybody else in the world. So if they're going to be producing more chips than anybody else in the world, AKA they're basically competing against Amazon, right? At that point, hopefully I don't stop this recording, it's making me mad. Yeah, because if these recordings stop a lot of times, I'll just send it as is. I'll just take you out there a quick walk through while I'm yip-yakking through this property we have here. Before I lose my train of thought. Oh, so yeah, you know, now they're talking about you know, being able to produce chips, and we have, you know, again, robotaxi, and we have Optimus Robot, and all these major bullish catalysts for the future of that company. Boom, here's the pink room. Accent wall. Jenna did that accent wall. Here's a bathroom. Just kind of taking me through this one. By the way, we didn't buy this property like this per se. We're in here doing construction mode. We ripped up all the floors. Floors were like semi-okay, but they had like a little bit of water damage and stuff, but very minimal. We probably could have sent them. as is, but they were not waterproof floors, and I don't like not having waterproof floors, so like just redo them. Also, too, they look dated. They were like that. There's a lighter color wood. I know I'm completely switching topics with you guys, but just giving you all a rundown. I generally, I kind of forget to take you guys through these properties or whatever. There's another bedroom here. But by the way, this is actually one of our biggest leaps in investment properties. Rip these floors up as well. Another full bathroom. We have a bedroom over here as well. And take you downstairs. So we're in the upstairs of this building. Or house, whatever you want to call it. Yeah, and it was the biggest investment as far as like down payment, and I would say that's the renovation. We've done a lot more renovation. This was like a surface level, like redo, paint everything, and redo some floors. I'll take you guys down to the basement. It's pretty dope. It's basically just to be a giant master bedroom. Got fireplace right here, kitchen, dining room. So we're circled back around. There's the same floor staircase we just came down, and then we have another bathroom over here, laundry room over here, and then 2-car garage out here. I can't see nothing, but there it is. 2-car garage. Actually, I'll turn on the light so you can see how it looks with like. We have like different construction, staging stuff. I looked a lot worse in here yesterday, actually. We came in here and got some of the trash cleaned up. I mean, see, look at all these things here. All these things are for like the property and getting it staged, getting it ready. There's our flooring delivered on pallet. More things right here that are to be assembled and stuff like that. Yeah, this is one of the sick things about this house. I don't know if you can tell. I'm not gonna go out there because my doggos are out there. But we have a pool back there. We'll probably end up adding a hot tub at some point. This is a nice screened-in porch right here. So, nice big screened-in porch. Sliding glass doors. So this would be a cool, chill area. I mean, not only do you have like the pool area out there, you can see everybody out in the pool, and then you have this chill area. There's one of my doggos right there. That's Blue. How's it going, Blue? Hi, Blue. Hanging out. And then I'm gonna take you guys down to this basement master bedroom real quick. Now we have this thing blacked out. Oh, it's still so strong down here. We're doing a rebath on this thing. Completely blacked out. Strong. Boom. Black walls, black everything. Except for our fireplace over here. Looks pretty dope. Doing white floors. This is the first time we've ever done white floors. We're gonna see how this turns out. Not sure it was like the best decision, but we're doing it. White floors. We also painted that fireplace the white and the black that it is. Prior to that, it was just brick color. That wall was brick color as well. Oh, this is all basically like ugly paneling. So like I really like blacking out basements. We did that to our own house actually. Pretty big area over here. So like in the future, we might put a wall up right here. Make this the bedroom, and then just make this an entertainment room. But for now, we're gonna make like this whole entire thing a bedroom. So that way we don't have to build a wall right now. We don't have to add a door. You can just come down here and this will be your entire space for a bedroom. We're gonna like probably have to like stage a little bit of furniture around. Maybe have a second like entertainment living room area down here as like a private living room. And then here's this little small bathroom. This is one of my biggest pet peeves is this house's this bathroom. We ripped the vanity out, toilet out, gonna come back with new. But yeah, we're doing the rebath on that, replaced all the faucets and everything. I really want to make this massively bigger, especially if we're gonna keep this a master bedroom, because if you're gonna have a master bedroom that's this laid out and dope, you gotta have your bathroom to match it. Which means like you need like the jacuzzi tub, you need like that thing laid out, which we have the square footage. So there's not a problem with that. I mean, we have this whole entire area over here that's just like wide open. One, it's just more construction time that I don't feel like doing right now. I want to get this thing listed and start making some money off of it. and also plumbing, especially the drains. We basically have to cut into the concrete to relocate sewage lines and stuff like that. And that's something I don't like to do. Well, we haven't done it really yet, and I really don't want to. So that's the reason why right there. And on top of that, like this, sometimes we gotta just like start generating revenue off something, and then we can come back and revisit that 6 months from now, a year from now. This property in particular, we're actually gonna do a cash out refi on it. So we have different strategies. Where some properties we just buy them and hold them long term. We're gonna buy this and hold this long term. Every property that we do, we buy them and hold them long term. That's one of our strategies. However, some properties are buy them and then rent them and do like no renovations at all. But whenever we have ones where there's like upside in equity and upside in renovations, that'll be a cash out refi. For example, we bought this house for $240,000. It appraised at that given time for $277,000. Now we came in, we did all our renovations. I think we're gonna get $377,000 for this property. So, yeah, that's gonna be that's the strategy with this property, right? So that's the difference between some of our other properties. And so again, like with a cash out like that, we're gonna probably have like, I don't know, maybe 30,000 in this property. Well, maybe 30,000 in this property, and we'll be able to cash out like $100,000, which means not only did we spend $0 for this house, but we got $30,000 back out of this house. So that's one of the big advantages to doing like a cash out refi deal versus like just you can buy those ones where you don't have to do nothing and you can just send them. However, all your cash is locked in and you basically only get that cash back from cash flow. Whereas this right here, we can look at this deal different and we don't have to worry about just getting our cash back out of cash flow, which this will definitely get us our cash off our cash flow as well. But we're going to also be able to get our cash from a refi as well. So in 6 months, we'll be able to refi on this property, pull out that $100K, and flip that into the next deal, put that back into the stock market. You know, that's how I wish-wash money. That's why, like, this past year or two, like, you know, my personal, like, success and business success and all that has, like, really accelerated is because, like, I'm just doing a lot of wish-washing with investing in the stock market. If the money's just sitting idle, it's in the stock market. And if it's not sitting idle, then or you know, if it's in motion, then I'm probably using it to buy another property or something along those lines. And again, just wish-washing that. So again, like, you know, let's say for instance, I had to spend $70,000 in cash for this property. Just giving you an example. If I had to spend $70,000 for the down payment, the renovations, and all those good things, right? If it cost me $70,000 cash, I'm out that cash, right? That money's not sitting in the stock market. But then I can turn around, flip that, aka cash out refi, and I have $100K to put back in the stock market. So not only did I get my money back, now my money wasn't in the stock market for 6 months, so that has to be taken into consideration. And I think like now with like Tesla being in a delicate situation, aka at any point in time, that's gonna really explode, and there'll be missed opportunity. In all reality, I'll probably lose money. And even some of our properties, I told Jenna, which is my fiance, I said, buying these houses is one of the worst financial decisions we will ever do. And I say that on like on a percent gain perspective. I say that on a percent gain perspective because, you know, our big reason why we're doing why we did properties over stock market or deployed money towards that is for cash flow and diversification. Right, stock market doesn't really cash flow, at least for the stocks that we're invested in. Now, cash flows as far as like if you want to take your gains off the table, but it's not a traditional cash flow. It pays out X amount per month. So cash flow, which you need your cash flow, and then there's diversification. Tesla can go down tomorrow, go up tomorrow, do all these different things, right? All these stocks, and you can lose everything in the stock market, right? And then we still have like a save as point of these other assets that cash flow us and also have us locked into some certain amount of net worth. that is locked in forever pretty much, you know. And same thing too, the property side is protected by, we have stocks going on. So yeah, I'm gonna end this one here. It's like a 40-minute video already. Y'all had to like sit there and watch me paint a whole bedroom. I'll catch y'all on the next one. If this was enjoyable to you guys, subscribe, and catch y'all on the next one. Peace.